actually snap that, and you can use that to fill in form, and we'll send you the presentation. So I think I've got it at the end of the presentation as well, but I put a version up here so you can quickly snap it now if you like. Huge thank you to members of the CDR.fyi team. Tjorv was instrumental in preparation of this presentation. Anybody who's in the community knows Tang Chen, and we've also got Kat Neal, who's right here, actually filming the presentation. And if that works, then we'll also send you a copy of the film. Okay, digging in. So our mission, accelerate carbon removal. We do that because we are seeking to institutionalize transparency in this industry. We believe that transparency leads to trust. Trust is necessary for relationships. Relationships lead to business. Business leads to more CDR, and then hopefully we can create the virtuous cycle of getting that information to be transparent again. We provide a set of different tools and capabilities out of that information. We have actually just launched, I'm announcing it today for the first time, a data partner program where companies in the industry, so suppliers, purchasers, registries, and intermediaries who have information to share can get access to the enhanced insights that we have. Some of the early partners that we've got, Isometric and Rainbow amongst registries, Climify, Climeworks, and Carbon Future amongst intermediaries, and Sistera suppliers. But this is open to all market intermediaries. Again, through that QR code, you can contact us or just reach out at team@cdr.fyi. All right, buckle up. Okay, 2021-2025, we've just come through a Microsoft amplified bull market in durable CDR. Microsoft has been an enormous tailwind to this market. You look at the numbers that we've seen over the course of the last 5 years, and especially if you look at those Q2s, quarter two, in the last 3 years. This is 3 years running. I've been giving this presentation, and every year it's been Microsoft with some big announcement. Here we are. We've just actually come off the biggest Q1 on record, which is a great sign. However, we have yet to have enormous announcements from Microsoft. We of course know about the pause. We'll talk about that in a little bit. There's also been a very steady increase in deliveries and retirements, which is nice to see. So, the last slide was a 42% CAGR in terms of contracts. In terms of deliveries and retirements, we're looking at somewhere in the sort of 113 to 118%. So it's been growing very nicely, continuing, and cumulative deliveries are now about 3% of contracted. Again, the contracted number is inflated by some longer term deliveries, and so deliveries haven't happened yet. So, big stress test in this market is Microsoft hits the pause button. I'm sure we all are familiar with the fact that what was reported in HEMAT News. At that point, as of mid-April, Microsoft accounted for 78.5% of all disclosed durable CDR purchases. I'm always caveat, let's use the word disclosed because there are deals that are done but are not yet announced, and so there's sometimes a lag of anywhere from 3 to 6 months, but then the number wouldn't change significantly. Microsoft does account for the majority of this market. So the big question, of course, that we all have is, how do we make up for that tailwind? And what does this market look like without a Microsoft? So on that, good news, the rest of the market is slow growing. So if we take out Microsoft, and obviously Frontier has a pretty big impact as well, durable CDR purchases by year have still been growing significantly, 150%. If you actually do the math in terms of where we are now and getting to sort of that 6 gigatons a year by 2050, you're talking about a market that's got to expand by something in the neighborhood of about 50 to 55% a year over the course of the next 25 years. So it's nice to see healthy growth rates in the beginning. That is what we want to see. The key challenge obviously going forward is maintaining that. So continuous growth of smaller buyers. Q1 again, the most significant one that we've had on record. Caveat always is that it's a lumpy market, and so just because we have a strong Q1 one year, it doesn't mean it'll necessarily fall through the other quarters. Hopefully it will. I'm certainly hearing good buzz about other deals that have yet to be announced. So outside of Microsoft and Frontier, the deliveries are also increasing, similar to the story that I showed earlier in terms of deliveries. What's really interesting about this, of course, is that Microsoft and Frontier, and especially Microsoft, are in very much longer duration contracts and future deliveries. And so when you remove their impact, you're looking at a much higher percentage of delivery. So when I said it was about 3% for the market as a whole, it's actually up to about 13% when you take out Microsoft and Frontier from the equation. And this is really interesting, when you actually, again, remove them and you look at share of contracted, delivered, and retired, then the sort of like ex-Microsoft, ex-Frontier segment of the market only accounts for 17% of contracted tons, but 90% of the delivered and 94% of the retired. So there's very, a much greater sort of emphasis on when we can actually see the delivery and the retirement. Now, amongst the different methods, what we saw in 2025 is that bio-based methods have really jumped ahead. They have a lot of momentum. So in 2025, and this does include the Microsoft numbers, 69% biochar, you've got 17% biomass geologic sequestration, BCR, the biochar is 10%. So in total, 96% of the contracted volume in 2025 was actually biomass-based methods. And in terms of deliveries, I think we've all known and reported for a while that biochar is by far the leader, so 80% deliveries last year. Mineralization was actually strong, and then you've got BECCS and biomass, so that's about 91% for biomass-based methods. So, if you really look back at the course of the last 5 years, we've seen a varying level of progress from the different methods. And I think, again, if you said 5 years ago, and you looked at sort of forward, you say, well, there's a lot of potential for a lot of these different methods, and that is true. And now where we are, and we can look back, we can see that certain methods have progressed more quickly. Biomass-based Biochar projects have been typically closer to operations. They've had lower capital intensity, and MRV has been relatively clear. And that's enabled them, the pricing has been lower, and so that's enabled them to jump ahead. DACs, a little bit slower to develop. Climeworks, kudos to them for being as open as they have been with some of the data that they've actually acquired on the industry. And David just mentioned in the last session about, hey, what are some of the methods that are nearer term delivery. So I think it's important to, as we recognize what's happening in the market, to adjust and adapt. And there's a variety of methods that have still a lot of potential, but have had some sort of friction. It might be perceptual friction, might be regulatory legislative friction, local policy, MRV, whatever the case may be. So it doesn't mean, we're not certainly in any way, none of us are condemning those methods, to the scrap heap. It's just a question of how do we actually ensure that they continue to get funded as the nearer term delivery methods get their attention. Pricing. So we just released a couple weeks ago the second pricing survey that we did with Opus, which is Dow Jones Company. I don't say that for our sake. That is their official name, Opus at Dow Jones Company. But positive sign that compared to last year, price expectations are converging. So this is the gap between what purchasers expect in price and what suppliers expect in price. And last year, 107, positive movement towards 98. And by 2030, the expectation is that it'll go down to 48, at least from a looking forward 5 years perspective. Turns out that isn't uniform. It actually varies by method, as one can imagine. It's not one market, it's more like 7 different markets. And you can see that some of the spreads, in terms of expectations, go down pretty significantly. The one that's really worth calling out is that as much as both suppliers and purchasers expect pricing, for the most part, to go down over the course of the next 5 years, in the case of biochar and BECCS in particular, there's a divergence. And the divergence is that purchasers expect the price to keep going down, and suppliers expect that price to stay neutral, or in some cases actually go up. And I think that's really worth calling out for the market, because I think there's an expectation that, hey, pricing, we're now on the downslope and it's just going to continue to decline, and that may not always be the case. Whether it be increasing competition for feedstock or supply-demand dynamics, I think we really got to watch out for what's going to happen for the biomass, and especially the biochar and BECCS markets over the course of the next 3 to 5 years. Oh, and actually, sorry, I don't know how to go back on this thing, so one thing I'll say is that $100 a ton. Nope. Red button. All right, here we go. $100 a ton, just let me call it out, that is now a pipe dream for the next little while. So nobody that we surveyed, whether it be supplier or experienced purchasers, I shouldn't say nobody, I think there was literally one response of a purchaser who's expected a price lower than $100 a ton. And I'm not saying it can't happen, but at least amongst those that we surveyed, it is not a realistic expectation. So, dug a little bit into what buyers want. We asked them, what is absolutely core to your purchase? As in, I would not purchase this durable CDR if I did not have this. And then we asked, would you pay a premium for? So it's not core, we would still proceed, but I would pay a premium for this. So in terms of core, not surprisingly amongst durable CDR purchasers, number one thing is 100+ years of verified permanence. The second thing, which actually I found illuminating, and almost sounds self-serving on our side, is they show supplier transparency and disclosure. But right behind that is supplier reputation. And so what that really comes down to is, I think both of those are saying, buyers are saying, I want to know what we're getting. And the more transparent that suppliers are with their information, the more it gives the purchaser a feeling of trust and confidence in that supplier. And then obviously the reputation plays into that as well. And then following that, price aligned and high reliability delivery. So when we look at what they would pay a premium for, so again, we're not looking at core anymore, the number one that they would, it's not core, but will pay a premium for it, was strong co-benefits. And then beyond that, it was 1,000+ year verified permanence, alignment with policy, delivery liability, and registry reputation. So what's holding the market back? This is super interesting, just in terms of different supplier perceptions of what's holding the market back versus purchaser perceptions. I think the first and third here are kind of flip sides of the same coin. Purchasers look at it as price, and suppliers look at it as business case. Delivery risk, note how it's much higher of a holding us back for purchasers than it is for suppliers. So suppliers perceive this to not be a risk, but it is perceived to be a risk by purchasers. And the other one I thought was interesting is, again, verification or MRV confidence. Again, that's the buyers looking for some mitigation of risk and confidence, and the suppliers are not aware of just how important that is. Policy, so it's moving. There's actually a lot of positive movement on the policy front, all over the world. It's actually really reassuring, if you like, encouraging to see what this map looks like, or these sort of set of bullet points versus last year or previous years. So things are sprouting up, which is a really positive sign. The challenge is, don't expect it to make a major market impact in the course of the next 3 years. This is hunker down time, and there's a expectation that success is preparation meets opportunity. Well, opportunity has not struck yet, so this is preparation phase. Continues to be preparation phase over the next few years. There is a high demand, given the challenges around demand. There is a high demand for an urgency for financing on the part of suppliers. So when we did this survey with Planet 2050 in the fall, 70% of suppliers said that they were looking to raise funding in the course of the next 3 to 6 months, which is a very high portion, obviously. And about 70% of them expected that subsidies and grants would be a major portion of that. Which is, on the one hand, I sort of question, is there enough of that out there? But on the other hand, it might be somewhat necessary, because while VC and equity financing capital is available, it is becoming much more selective. We took a bit of a step back in terms of equity financing in 2025. On a relative basis, Biochar stayed pretty steady, went up on a relative basis. MCDR and DAX, their numbers went down. There is money, but it is becoming selective, and they're really valuing operational excellence. So, key takeaways. Durable CDR purchases, deliveries, retirements are continuing to grow. Tailwind has been removed. It's up to the market to demonstrate that the resilience and continue to grow it. Bio-based methods are having a moment. BECCS and Biochar. Price gap is narrowing overall, $100. Let's not even think about that. There is variance by method. Biochar and BECCS will be tightness. Experienced purchasers talked about sort of the most constrained by price, delivery risk, confidence, looking for transparency as much as possible. Policy progressing, don't count any chickens in terms of what's going to happen in the next little while. Markets resilient, becoming more selective, again favoring lean operators. So that pretty much end this, but parable of stonecutter, if anyone's not familiar with this, stonecutter is chipping away at a block of stone 1,000 times. Little chips come off here and there, and on 1,001st, the stone breaks. And this is the market we're in. And every single one of us, it's on us. Every sort of delivery, every contract, every piece of policy matters. And so my message to us all is keep chipping. Thank you very much.